guys, welcome to the Silver Report. Here we are, it's Friday, April 7th, 2017, and let's get right into some of the economic factors that will be playing a part into the price of precious metals. Now, one thing I wanted to point out before we get into some of the bigger news is, number one, the Federal Reserve came out in their minutes meeting and they had some very alarming statements that they made, some things that were not really previously thought of. Number one, they had discussed lowering their balance sheet and normalizing their balance sheet by 2021. But now they have upgraded their time period to begin to unload their balance sheet in 2017, 2018, by the end of this year. So this was not something that was supposed to take place until at least 2018. Now, what we've seen, I wanted to draw your attention to something. The Fed's balance sheet before the financial crisis was $900 billion, and it remained around that level. And what we've seen after the financial crisis, the Federal Reserve began some very unprecedented monetary experiments in the United States. Number one, they dropped the interest rates to 0%. They also began to get their hands within the market. They began to buy toxic bonds. They began to intermingle within the stock market to hold up failing asset classes. And now what we've seen take place during this time is that we've had the stock market continue what they say the longest bull run in a long time, but really it's all fabricated. This market has been propped up by the Federal Reserve Bank, by quantitative easing. Now we see on this chart here, around 2015, it began to taper off some, at which point we saw the stock market had two dips during that time, two major dips during that time. And what it was from is the fact that the Federal Reserve took their hand off. And now we've entered this area of unprecedented enthusiasm where there is a lot of non-conventional investors that have now put their money into the stock market. One thing that they're failing to do is the Federal Reserve is planning on selling off these exact stability points. It's, for example, you build your house over the water. It's a dangerous place, but you build it on stilts and you only build a top floor. That way it's not taken out when a storm or hurricane comes. And what we're seeing is they're beginning to take out some of the supports that have been used to hold up this structure. And a lot of people are unaware of the Federal Reserve's activities. They think, they're completely unaware. They're oblivious to what the Federal Reserve has been doing. And this is completely unconventional, 0% interest rates. They've been attempting to somehow manipulate, and they've also got their hand into every aspect of the stock market. Now, the Federal Reserve noticed something. What they discussed in their minutes meeting was that they pointed to the stock market being high as a danger. They said they saw danger of a potential massive correction. So they need to keep that on the table. They said that their financial planning policies are open to change entirely. And this is what spooked the markets. This is what got the markets, especially the bond market, was flashing red signals that they are going to stop holding this up. They're going to begin to. Another thing that they pointed to was the fact that this is extremely overvalued by conventional metrics. That when you look at the stocks to earnings, that it's absolutely insanity what is going on right now. So they raise the interest rates. They're attempting to try to cool this down. This is what they mean by the economy heating up. And it's not really being effective. So now they need to begin to empty their balance sheet. Their target is to bring this stock market down calmly, coolly, because their concern is a major market crash as a result of them no longer supporting it. This market is not one that can stand on its own, that can rely on its own. In fact, it is all an illusion based upon printed money given to their banks to profit as they will. You notice that these JP Morgan Chase, the Citibanks, all these, they don't have a day of losses, maybe one or two in years. And it is largely because the money is given to these banks in order to prop up different parts and the stock market. It's not their money. They're gambling with other people's money. And what we're seeing is a very dangerous sign as the Fed begins to relieve some of this $4.5 trillion debt balance. Now, also, what we've seen take place, we have now Russian naval fleet is on its way into Syria, into the Mediterranean. It's just entered, and it's approaching the U.S. military destroyers, or the U.S. Navy destroyers. They're armed with their own cruise missiles. We have reports that one of the destroyers has left to an undisclosed location to go rearm. We also know that Russia had come out and they had discussed how that they see this as an attack on a sovereign nation, and it's illegal. Many people say that the president needs congressional authorization to be able to participate in acts of war like this. And we do know the president's stance was to act secretly and quietly as to not allow his enemies. But we also know that this has been the call that has been generating on the mainstream news for quite some time now. And so it's not the voice of the people. It is the voice of the deep state that they say does not exist. But this is the calls that have been taking place, not only on The View or ABC or CNN. All of a sudden, they all just have one stance. Now think about this, just one moment. There's reports that come out there's a Syrian gas attack. There's no investigation. The only investigation we seem to have is John McCain. They used weapons of mass destruction. They killed the children. They killed the little children. They hurt the little children. Weapons of mass destruction. And why does it sound so familiar? I swear we've been here before. Where they must be stopped. They must be stopped right now. And so their target, Bashar al-Assad, once again attacked. And it's very provocative to have the United States firing on them for independent things taking place without any kind of UN resolution and all of America's allies backing down, saying there's no way at all we're going to support your attacks on a sovereign nation. And more than that, as the president orders the attacks, sits down calmly to eat with President Xi Jinping from China, looking him in his eyes and telling him, I've just ordered an attack on Syria. Now, we know that this escalation is not positive for the United States as we see investors pour into gold and silver immediately upon the reports. It wasn't more than 30 minutes apart that we had heard that naval destroyers were on their way towards Syria, that we had began to receive the reports that the missiles were fired. Now, these are very dangerous times. We're waiting to see just how the international community reacts, because we may be seeing a lot of trouble. We saw the dollar dropped as a result of this move, and we might be seeing a lot of trouble on world markets and also very high volatility within gold and silver. All right, thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos, get the word out. I thank you guys all so much for stopping by. As always, stay safe.